After weeks of trading, I was able to take my account from $2,000 to $9,000 in just 10 trades. With my account nearing the finish line, I took a trade that ultimately ended the $10,000 challenge. Welcome back to the channel. In this video, I'm going to be walking you through the final trade of the $10,000 challenge and explain the thought process behind every decision and the lessons every trader can take away from this experience. If you find value in these videos, make sure you hit that subscribe button so you can get an inside look on how I trade options. With that said, let's jump into the charts. All right, getting into the final trade of this challenge, you can see that the SPY broke into new highs, breaking past the 748 range, and now we're testing new highs, trading in the range of 751. If we move over to the 5-minute chart, we can see that we are starting to push past the post-market, pre-market highs. I'm going to mark that area here. So we have a range at 751.42, and we can also see that we're trading above the 200 SMA and the 50 SMA, along with the 9 EMA pushing past the 50 SMA, which is showing a bullish sign. So if we can push past the 751.43 key area here, we can probably see a continuation to the upside. Now we don't know exactly how high just yet because there's no ceiling after this. However, there is a lot of potential for us to start pushing towards the 760 range. So this is where I decided that I was going to go long and try to take on some calls. Did enter with 10 contracts for a price range at 84 cents. We're in for close to $1,000 on this trade, and we're going to see exactly how this plays out. All right, zooming in a little bit here, you can see again that we are holding above that 50 SMA, and our 9 EMA is crossing above that 50 SMA, showing a bullish signal for us to continue in the up direction. So if we can get a break past that 751.43 range, then we could probably push past the strike price that we're in at the 752 range. So that's exactly what I'm thinking in when I enter this trade here. Now there is some risk in the sense of we are right at resistance level, which is based on the pre-market, post-market trading. However, based on the setup, I believe that it's probable that we're going to break past that range and continue to the up direction. I'm going to skip ahead here a little bit to see exactly how that played out and the decisions I made after the price range started to move around a little bit. Okay, jumping ahead to 1050, we can see that we did get a break and retest on that 751.43 key level that we drew up here, and we're seeing some pretty significant buying pressure to hold above that level. So at this point, I decide that I'm going to add a little bit more contracts into this trade because it's looking pretty good, and I want to make sure that I'm maximizing my profit potential. So at this point, I add another 10 contracts at the $1 price point on the strike, and again, I'm at the 752 strike. I did average my position up instead of averaging my position down here. However, I did feel pretty confident with this trade since we did break above that key level of 751.43, and at this point, I'm thinking we're going to come down, retest it again, and then continue to the up direction. And we're so close to being in the money with our strike being at 752 that I'm feeling pretty confident that this trade's going to be an overall winner. So that's exactly why I decided to add here. Again, I added initially entry point here, so I did buy around this candle here when we broke above, and then I'm adding again at this candle here as we retract down and retest on that key level at 751.43. So there's two areas that I entered in at this point, both at 10 contracts each, giving me 20 contracts total, and I'm in for an average of 93 cents. Everything's looking pretty good at this point. We're trading above VWAP, we're trading above the 9 EMA, we're trading above the 50 SMA, and it doesn't look like there's any significant signs that we're going to start trading in the down direction or there's going to be a trend reversal. Overall, this looks like it's a pretty strong trade. The daily shows that we broke into new highs. We're holding above that 748.30 range, which is the previous high, right? And now we're breaking past the pre-market high. So this is looking like a very bullish trade on this day. So that's exactly why I decided to add more contracts to this so I can maximize the profit potential on this trade. We're going to jump ahead a little bit to see exactly how this played out, and we'll get back into it. Okay, jumping ahead just 10 minutes, we can see that when the price came down to retest the 751.43 range, we did break past that and we entered back into the channel of the range for 748 to 751. And this is actually a clear indication here that the continuation to the upside is not going to happen, right? We tried to break above this previous trading channel and it failed. So this is actually a clear indication that this is a bull trap, unless there is a bounce off of the 50 SMA and the VWAP area here. Initially, when I was looking at this, I thought that we were going to get a pretty aggressive bounce off of this area here, since we do have the 50 SMA and the VWAP area. So I decided actually at this point here that I was going to buckle down and add another 25 contracts. So at this point, I'm sitting in with 45 contracts, and this is not a good position to be in based on the break back into this channel range here, right? When I was originally trading this, I didn't take into consideration that this channel was going to be the trading range of the day. This was actually a really high chance that the price wasn't going to break back above 751, but rather trade in this trading channel here from 748 to 741. And if that's the case, that means that this is going to be a bearish day. After a break above, we broke back below a key area. So now it's likely that we get a retest on that level before a continuation to the downside. And this is exactly where I shouldn't have added to this position. I should have actually offloaded this position instead of averaging down. What I did instead was I didn't want to accept the fact that I was in a losing trade, and I thought that I can save this position by averaging down. So I'm going to jump ahead again and see exactly how this played out for us. Okay, jumping ahead about 20 minutes, we can see that the price did continue to stay below our key level of 751 and started to trade in the gray area that we highlighted here. So this is not looking good already. So I am currently in with about $3,000, and this is clearly going south very quickly. So instead of closing my trade out, I still was not convinced that this trade was over. So we are getting close to an intraday key level here. So if I highlight that real fast, I can use that as an area for a potential bounce. So we didn't get that initial retest off of the 751 area here when it broke below it. So it did hold a little bit with this hammer candle on the VWAP, but then it continued to sell off. So I was thinking that since we have a doji candle here, followed by a green candle, we were close to retesting this intra-channel support level, and we would potentially try to push back up towards that 751 range. Now, this is a very optimistic outlook on the market overall, and I think that I didn't want to accept the fact that I was in a losing trade. So I decided that I was going to add even more to try to average my position down to give me a better advantage of either breaking even or getting a little bit of a profit on this trade. So instead of closing out the position and just accepting the loss, I decide to basically go all in with my account to try to average myself down, buying in with 140 contracts. Now, this was a terrible decision on my part. We are seeing that we are not holding this key area here at 751. We are continuing to trend in the downward position, and now we're making an intraday demand zone a key level for us to potentially bounce to get us out of this position. Now, a lot of emotions were in play at this point. I did not want to see my account draw back as far as it did, because I was in pretty heavy already when I averaged down in this candle, being in with a little bit over $3,000. So I thought that if I did average down here, I could bring my average position down enough to potentially just break even and hopefully just write this off as a big mistake and move on to the next trade. We did have an average of 67 cents, I believe it was, and we're currently trading, when I bought into this candle here, the option price was sitting around 38 cents. So I'm going to jump ahead again to see exactly how that played out for us. But again, this is not looking too good. And if we did do a quick calculation, we can see that I was in, after averaging down with the 140 contracts, for about $8,700. So this is very close to being all in, since I did just bring my account up to $9,000. So again, let's jump ahead to see exactly how this played out after we averaged down so aggressively. All right, so at this point in the trade, we are close to market close, and we can see based on the overall look at this chart that this was a disaster of a trade. This is the worst case scenario of what can happen when you are trading and you are getting overconfident with your trades and you're not paying attention to what's happening with market structure. So you can see that after the break below the 751 key area, we didn't even get a retest on that level. It just continued to trade down towards the key support level of 748. And obviously you can probably tell that these contracts did decay over time. So at this point in the day, we can see that we're still trading below that 751 key area, and we really needed to be trading above 752, so our contracts would be in the money. However, we're not getting even close to that range, and this is the point where there was really no return, and I should have made a lot of different decisions to reduce my downside risk for this account so I can at least have some money to make it up in future trades. However, I was not in the right state of mind where I wanted to accept the loss, and instead I decided to go all in with this trade and really just make poor decisions throughout this whole day. After this break below the 751 key level, there was no indication really that was showing that we were going to get that bounce back and push above 752 range. So I really should have cut my losses a lot sooner. However, I didn't. I wanted to see if we would get that initial market reaction to push it to higher highs, and we did not get that. Once it did sell off down towards 748, we just oscillated in between that zone. Now at this point, the options are basically worthless, and there's really not much I can do here. This was just overall a very, very bad trade and a very terrible way to end the challenge, since I was so close to hitting that $10,000 mark, being at 9,000 and now bringing it all the way down to $0. This is a very hard pill to swallow. It was actually at this point where I should have cut my losses and said, you know what, I'll take the small loss of whatever it was. You know, it was probably at this point $1,500 that I was down. Instead of taking the loss, I thought that I can average down and break even. However, that's not always the case. You're not gonna always get a bounce, even though there may be an intraday support zone or there may be an area where you see a little bit of a bounce. That doesn't mean that it's going to bounce back up towards your average cost price point. So you have to keep that in mind whenever you're trading in options, because there is time decay, and you have to remember that there's not always going to be that surge of volume to kick that price or that option back up towards that price zone. This was a very poor executed trade, and unfortunately I was just too overconfident in my trading strategy, where I didn't consider the possibility that the market was going to continue to sell off and no volume was going to come through to push the price back up towards a range where I can at least break even. So ultimately, this was the end of the $10,000 challenge, and it ended with a blown account. And that's a very hard thing to say, because I was so close being at $9,000. We ended with nothing. I wasn't able to withdraw. I wasn't able to pay myself or really reap any of the rewards that I worked so hard for in the past couple of weeks. And so I want to leave you guys with this in mind. When you guys are trading, you want to make sure that you're holding yourself accountable, you're remaining disciplined, and you're not over leveraging. You want to make sure that you're cutting your losses as soon as possible based on any indication that you guys use, whether that's through moving averages or indicators such as support and resistance lines that are drawn up. You want to make sure that you're following your strategy and you're making sure that you're cutting your losses when the trade is not going in your direction. Averaging down can be advantageous. However, there is a drawback to that strategy as well, as we saw in this trade. So keep that in mind when you guys are moving forward in your trading journey, and don't make the same mistakes that I made in this challenge. Again, I was so close to hitting that $10,000 mark, being at $9,000, just to throw it all away off of one trade. This account may be gone, but the challenge isn't over. I was able to take $2,000 and grow it to $9,000 in just 10 trades. Now the goal is to do it again, this time with the discipline to cut my losses much sooner. If you want to follow the journey, learn from the trades I take, and dive deeper into market structure, options, risk management, and trading psychology, make sure you hit that subscribe button. Until then, peace.